Hey everyone, welcome back to Corporate Decoder. Today Mac just filed an 8K reporting a significant stock offering, and I am seeing a clear move to manage their debt. Quick note, this is not financial advice, just my take on public filings for educational purposes. Macerich is selling a big chunk of stock to pay down debt. Let's dive into what that means. So Macerich, a real estate investment trust that owns malls, filed this Form 8K to tell the public about a big stock sale that just happened on May 13, 2026. This is a pretty standard move for companies looking to raise cash. The company is called the Macerich Company, and you likely know them from their shopping malls. They are a big player in the retail real estate world. They sold a lot of their common stock. Normally, when a company sells more stock, it can make the existing shares a bit less valuable because there are more shares out there. But the reason they are doing it is key here. The core of this filing is about the company completing the issuance and sale of over 22 million shares of its common stock. Think of it as printing new shares and selling them to investors. They also gave the Underwriters, which are the investment banks helping them sell the stock, an option to buy even more shares, and the Underwriters took it all. This means they sold a total of 24.96 million shares. This all happened under an underwriting agreement. The price was set at $21 per share. So if you do the math, 24.96 million shares times $21 gives us a massive amount of money raised, over $500 million, actually around $524 million. This is a significant capital raise. Now, here is what they plan to do with all that cash. They are putting this money into their operating partnership, which is essentially the business unit that runs the actual properties. The most important part is that the operating partnership intends to use the net proceeds from the offering to repay borrowings. This means they are using the money from selling new stock to pay off loans they already have. Specifically, they are paying down their revolving credit facility. This facility was used to buy Annapolis Mall, which is a significant property, so this is a debt reduction strategy. They also plan to use some of the money for general corporate purposes, like buying more properties and investing in their existing ones, but paying down debt seems to be the priority. The rest of the filing talks about the usual stuff in these kinds of deals. The company made promises and guarantees, and they also agreed to protect the underwriters if anything goes wrong with the sale of the stock. It is all pretty standard legal language for a stock offering. This exhibit lists the actual underwriting agreement itself. It is the contract detailing the sale of shares. This is a legal opinion from the company's lawyers saying that the shares they sold are legally valid. This is just the lawyers giving their permission for their legal opinion to be included in this filing. This is a technical file for electronic data submission, not something that contains story details for us directly. This is the signature part of the filing, showing that Daniel E. Swanstrom II, who is the Senior Executive Vice President, Chief Financial Officer, and Treasurer, signed off on this report on May 13, 2026. He is a key finance executive confirming the information. Looking at this filing, Macerich is clearly focused on strengthening its financial position. By raising over $500 million, they are smartly reducing their debt load. This is important because high debt can put a lot of pressure on a company, especially in the retail real estate sector, which has faced challenges. Paying down debt can lower their interest payments and give them more flexibility to invest in their properties or ride out tough economic times. It is a move that signals financial prudence, especially after using credit lines to fund acquisitions like Annapolis Mall, while selling more stock can dilute existing shareholders. The immediate benefit of reduced debt risk seems to be the prevailing strategy here. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.